Welcome to Bears in Exile. Today is September 17th and it is the weekend market overview looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. Okay. We ended with an ugly little spinning top for Friday. Had a nice big green real body, a little stub shadow at the top and at the bottom. And we are closing in on the level that we think that we'll have some problems with. We're not quite there yet, but after we look at the SPX, we'll see that actually we are. Secondaries all pointing up, with the exception of the RSI. Beyond this, what problems do I have with this? Well, it closed above the upper price consensus level, which is really good, but our short-term moving averages, we did not get complete separation prior to entering the bar, and the fastest short-term moving average has already entered the bar. That is a big warning sign, and I don't like it. Beyond that, 60-minute time period, we have negative divergence in the CCI, in the fast stochastic, slow stochastic. 14-day RSI moving average is very high. We have divergence in the almost in the RSI, but not quite. And we have divergence in the MACD histogram. So there are some immediate problems with the Dow in the 60-minute time period. Going on to the SPX, we have a better formed spinning top. You'll notice that we are already into the real bodies of the previous high, not far away from the shadows and not far away from the devilish zone. So secondaries are identical to the Dow, 60 minutes is identical to the Dow. We are above the upper price consensus level, which is good. However, once again, short-term moving averages, we did not get full separation prior to entering the bar. I was hoping for more, but it is what it is. And that is a pretty big warning sign to me. If it's going to crap out, it should do it relatively soon. The real body of the candle may get to the top of the bar, which would be the shadow zone, but beyond that, very, very, very shaky, and the short-term moving averages should have problems as they enter the bar, since they are not completely crossed over or separated, I should mean. This last week we had some very positive NDEs. We have 5 days in a row green. And the European problem seemed to be better, but this weekend I was reading how they are not going to use stimulus to prop up Europe, and that is a pretty big negative. We do have QE3 discussions near the end of the week. There should be hope going into it, but if it becomes obvious that QE3 is not going to happen, which I don't believe that it will, that certainly will be negative, and which would coincide correctly with a failed bar retest, as long as it doesn't go too high prior to that news. But following that news, I'm definitely thinking we're going to have some problems, at least in the short term. The VIX ended spinning top well into the bar, but the short-term moving averages have not got complete crossover and separation. Not a good sign. It has already entered the bar. All of our secondaries, with the exception of the RSI, are ticking down. Going into the 60-minute time period, looking for positive divergence. We have it in the CCI. We have it in the fast stochastic. We have it in the slow stochastic. We have it in the RSI. We have it in, well, it's trying to fix itself, the MACD histogram. So there are some near-term problems which will need to deal with themselves at some point in the near future. XOI ended with a hammer, barely got into the bar. Short-term moving averages did not are not crossing over the way that we would like them to. Everything with the exception of the RSI, regular RSI, pointing up. This does not look too promising with oil. TNA, little hammery doji star looking thing, same as everything else. RSI ticking down, everything else ticking up. We have not exceeded the upper price consensus level as of yet. We still have a good bit to go before reaching the previous peak. This does not look good. 60-minute looking for negative divergence. We have it in the CCI. We have it in the slow stochastic, the fast stochastic, the RSI, very small in the RSI. In the MACD histogram, we're getting the bearish cross on the MACD. Not pretty. Not pretty. UUP, star of the show. Doji star on Friday, and it almost got the bubble corrective fix on Thursday. Not quite though. We still have another 2 days for the bubble fix to take effect. We are just below the upper price consensus level for the previous month. We have the 200-day RSI, 200-day moving average, simple moving average right above us, and kind of a mixed bag with the secondaries. CCI ticking up, stochastics going down, 14-day RSI moving average going up, RSI going up, very high, MACD histogram going down, MACD itself going sideways. It would appear to me that this seems to be a retest of the 200-day moving average. We did get above it. It did not stay there even for 1 day. It got closed below it. It's been there ever since. So it would make sense that it would go up, test it, and the market will get its lead from whether it breaks through it or if it fails off of it. So secondaries seem to imply that we're looking for a failure of the 200-day moving average, and that would be good for the markets. So it'll be very interesting to see how the NDEs for the coming week affect this, and pretty much there isn't too much to say beyond that. FXE, same thing. It actually looks like that it wants to go down some more. The short-term moving averages are pointing down. The middle Bollinger Band line still above them. We have spinning top, and then just like UUP, mixed bag, histogram going up, MACD sideways, RSI down, stochastics up, 14-day RSI moving average down, CCI down. So I would look for the 14-day RSI moving average to get a bit lower, then hook over and go back up, but that is just a guess, and that could be several days away. GLD, our second VIX, has a bullish engulfing off of the Thursday's candle. It is sitting on the bar, which is what we've been expecting. We expected it to go down and test the major price consensus level, which it almost did on Thursday, and now it's bouncing up. If the short-term moving averages want to come and sit on the bar, that's fine. Beyond that, everything ticking down except for the CCI. If it can maintain its current position and have the stochastics and the 14-day RSI moving average get all the way down to oversold area, that will be massively positive. So very curious to see how it keeps its current position, and if it wants to test the major price consensus level again, that is fine. As long as it stays above it, it's going to be a really good sign. SLV not doing as well. It did come down on Thursday, almost touched the major price consensus level. Short-term moving averages are going into the bar, and hopefully it won't develop into a double flat line, but we'll have to see. We have an uptick on the slight uptick on the histogram, sideways on the RSI, downtick on the MACD. Stochastics appear to be trying to loop up. RSI 14-day moving average pretty neutral, and uptick on CCI. So hopefully we will avoid that and be able to climb above the upper price consensus level. Well, there it is, and really are getting to the danger zone. I would be extremely cautious for this week, but we shall see. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.